Welcome to Blue Nile Tutorials. In today's session, we're diving into our 13th chapter, Income from Self-Employment Introduction to Basis Period and Opening Year Rules. For those starting a new business, understanding how your profits are taxed in the early years is crucial for getting your tax affairs in order. We'll break down the concept of the basis period, explain how the opening year rules work, and guide you through allocating profits correctly during your business's initial years. This session will make it easy to grasp these essential tax concepts, so you can focus on growing your business. Let's simplify the opening year rules and basis periods together. Grab your pen, and let's get started. One of the situations where the normal current year basis rules won't work properly is where a trader first starts trading. In questions we'll be told they have started to trade on a certain date, or set up a new business, or began trading, all meaning the same thing. Again, the best way to approach these questions is to set up a timeline to summarize all of the dates quoted, which we can then use as a guide to help us. We can talk through the general rules first without any specific dates, and then work through a series of examples to show how those rules would apply. So let's create a timeline, again in black with some lines to show the start or end of accounting periods, but without any specific dates for now. Mark the first black line as starts trading, and again in blue, add some points which could represent the end of the tax years. The rules then. For year 1, this is the first tax year when this person is trading. Based on the date trade starts and the first blue line thereafter, representing the end of the tax year, we can decide specifically which tax year this is. The opening year rules say we should declare income from self-employment for this year for the period starting when trade begins and ending next 5th of April. This is always the case regardless of what accounting period the trader chooses. Once we have worked through some examples, you'll see that year 1 is not too bad to deal with. When we have decided what period of time we're interested in, we can then start to think about how to calculate the income for that period of time. In year 2, this is the second tax year in which the person is trading, and this is generally the problem year. To help us deal with this problem, we use 2 questions. Question 1. Is there any accounting period ending in the second tax year? Sometimes there will be and sometimes there won't. If there isn't, this tells us that the basis period for the year 2 will be the actual tax year dates, i.e. the 6th of April to the 5th of April. And so we would need to find a way to calculate a profit for this period of time. However, if there is an accounting period ending in the second tax year, we go on to question 2. How long is that accounting period? Now look at that question carefully, as the most common mistakes with opening year rules is because this question is misunderstood. It does not say how much of that accounting period ends in this tax year, or how much have we not yet treated as income for an earlier year. It simply says how long is that accounting period. The whole thing from start to finish. There are 3 possible answers. It's less than 12 months long, it's exactly 12 months long, it's more than 12 months long. And each of these answers tells us what the basis period will be, but each one is different. If the accounting period is less than 12 months long, the trader has run the business for the whole 12 months of the tax year, so it's logical that we must include 12 months of income. In this case, the 12 months that we use as the basis period is the first 12 months of trade, i.e. starting when the business first began, we count forward 12 months and take the profit for this period. Again, we can use some examples to show how to calculate the actual figures later. Accounting period is exactly 12 months long. In this case, we can actually adopt the current year basis. We have a 12-month accounting period ending in the tax year, so our basis period will be this 12 months. Accounting period is more than 12 months long. Again, we must include 12 months of income, but the problem this time is that if we use the accounting period in full, we'll have more than 12 months of profit. In this case, the 12 months that we use as the basis period is the 12 months to the accounting period end date, i.e. starting when the accounting period finishes, we count back 12 months and take the profit for this period. Again, we can use some examples to show how to calculate the actual figures later. What these examples have shown us then is that in year 2 there are 4 completely different periods of time which we might take as our basis period depending upon the situation. In all cases though, we are looking to include 12 months worth of profit, which is a fundamental point. In any tax year other than the first and last, we must include 12 months of profit and only 12 months. The question is merely which 12 months. Moving on to year 3. In most cases, by the time we get to year 3, we'll be able to adopt the normal current year basis rule. There will usually be a 12-month accounting period ending in the tax year, which we will then take to be our basis period. If not, we'll use the same approach we just discussed for year 2 to determine what the basis period should be. This seems like a good point to start looking at some examples. So example 1. Monica started trading on the 1st of November 2016, preparing accounts for the 31st of October each year. Her tax-adjusted trading profits were, for the year ended the 31st of October 2017, £18,000. For the year ended the 31st of October 2018, £37,500. We start with the timeline. Black lines to show the 1st of November 2016 as the start date, 31st of October 2017 as the end of accounting period 1, and 31st of October 2018 as the end of accounting period 2. Blue lines to show tax year ends, 5th of April 2017, 2018 and 2019. Working through our rules. Year 1 for Monica will be the 2016-17 tax year, as the start date of 1st of November 2016 falls within that year. We said that for year 1 we always take the period between when the trade begins and the next 5th of April. So here it is the period 1st of November 2016 to the 5th of April 2017. One of the rules we adopt in exams is to work in complete months only. So although technically the basis period runs to the 5th of April, we'll only count the months to the 31st of March. So here we need to find the profit for the 5 months covering November to March. This 5-month period forms part of the first accounting period to the 31st of October 2017, which is 12 months long. So to find the profit for the 5 months we can take 5/12 of the £18,000 profit for that year to give us £7,500. What we are really doing here is assuming the profits of the business accrue evenly month to month. Year 2 is our problem year, and here is the 2017-18 tax year. Question 1. Is there an accounting period ending in the tax year? On our timeline we can see the black line marked the 31st of October 2017, so yes, there is an accounting period. Question 2. How long is the accounting period? Here is a 12-month accounting period, so from our rules the basis period is that actual accounting period, so the current year basis, i.e. the 12 months to the 31st of October 2017. We will include the whole of the £18,000 profit for this year as income for 2017-18. You will see that now we have 2 arrows covering the period the 1st of November 2016 to the 5th of April 2017, as we have included the profits for this period as income in both the 2016-17 and 2017-18 tax years. Whilst this might not feel right, it is exactly what the basis period rules tell us to do. This is called an overlap period. Any period where the profits have been taxed twice. For now, all we do is identify this period, calculate the value of the profits and carry them forward. We'll come back to look at overlap profits again in a later session. The overlap period here is the same 5 months we included as income for 2016-17, so we carry forward overlap profits of £7,500. Moving on to year 3, we said in most cases we would be adopting the current year basis rules by this year. So year 3 is 2018-19, and if we look at the timeline, the accounting period ending between 6th of April 2018 and the 5th of April 2019 is the year ended the 31st of October 2018, which is indeed 12 months long, so yes, we can simply take the profits for this year of £37,500 as income for 2018-19. As this business continues, the next accounting period will be taxed in each of the next tax years with no further overlap profits being created. Example 2. Ross started trading on the 1st of January 2018, preparing accounts to the 31st of July each year. His tax-adjusted trading profits were the 7 months period to the 31st of July 2018, being £10,500, and the year to the 31st of July 2019 being £33,600. We again start with the timeline. black lines to show the 1st of January 2018 as the start date, the 31st of July 2018 as the end of accounting period 1, and the 31st of July 2019 as the end of accounting period 2. Blue lines to show tax year ends 5th of April 2018, 2019, and 2020. Working through our rules, year 1 for Ross will be the 2017-18 tax year as the start date of the 1st of January 2018 falls within that year. We said that for year 1 we always take the period between when trade begins and the next 5th of April, so here is the period the 1st of January 2018 to the 5th of April 2018. Here we need to find the profit for the 3 months covering January to March. This 3-month period forms parts of the first accounting period to the 31st of July 2018. But be careful here, this accounting period is only 7 months long, so to find the profit for the 3 months we want, we can take 3/7 of the £10,500 profit for that accounting period to give us £4,500. Year 2 is our problem year, and here is the 2018-19 tax year. Question 1. Is there an accounting period ending in the tax year? On our timeline, we can see the black line mark 31st of July 2018, so yes, there is an accounting period. Question 2. How long is the accounting period? Here it's a 7-month accounting period, so from our rules, the basis period is the first 12 months of trade. What we want to do is calculate a profit for the period the 1st of January 2018 to the 31st of December 2018. To do this, we will include the whole of the £10,500 profit for the first accounting period of £10,500, but we will then need another 5 months. This 5 months is part of accounting period 2 to the 31st of July 2019, so we will take 5/12 multiplied by £33,600 and include this in year 2 as well. The total income to show for 2018-19 will be £24,500. Moving on to year 3, we said in most cases we would be adopting current year basis rules by this year. So year 3 for Ross is 2019-20, and if we look at the timeline, the accounting period ending between the 6th of April 2019 and the 5th of April 2020 is the year ended 31st of July 2019, which is indeed 12 months long. So yes, we can simply take the profits for this year of £33,600 as income for 2019-20. This time you'll see that there are 2 overlap periods. The period the 1st of January 2018 to the 5th of April 2018, and then the 1st of August 2018 to the 31st of December 2018. These have both been included twice as shown by the 2 arrows covering these periods. The overlap period here then is the first 3 months included as income for 2017-18 and 2018-19 of £4,500, and then the 5 months between August and December 2018 of £14,000. So we carry forward total overlap profits of 8 months and £18,500. This approach to opening year questions will work with any set of dates, so work through the separate session with some extra examples, but also make sure you do some additional home study on this as it's a very important topic for tax.